So it's always slightly problematic when you're the only thing standing between your audience and a cold beer. And now there are only two of us to hold that fort, so let's see how we do. I think Nevsun has presented here before. I haven't, because I joined the company a month ago. I thought I'd just start with a bit of background on myself and our new CEO. I was previously at a private equity fund in London, where I spent the last 5 years kicking the tires on base metals projects around the world. And I took the view I could either keep kicking those tires on copper deposits that average 0.3% in grade, or I could come join a company where the indicated material is 13% in grade. And the second option seemed a lot easier. And I think that's, from my perspective, our current CEO, who also joined earlier this year. He was previously COO of Tech Resources, COO of ArcelorMittal Mining. The conversation he had with me is, here the previous management team has done a fantastic job laying us a good platform. I think, in fact, our former chairman is in the room somewhere. I'm not just saying that because he's here. But they discovered and built this high-quality mine in Eritrea. And then they used the cash flows from that mine to not only pay out sector-leading dividends, but also use those proceeds to buy another high-grade, high-quality project in Serbia. So from my perspective, I want to jump into the slides and just start off with as I mentioned, very high-level overview of the company. We produce zinc and copper. At the moment, zinc has been the unfavored commodity for many, many years, and it's having its moment in the sun, which suits us pretty well. Copper, from a commodity market perspective, we like it in that the price is now back up into the $2.90 to $3 range. But I think what we think is particularly interesting as you look forward to kind of the early 2020s, that's where we see very few new copper projects coming onto the market. And that's the time, and this is through much more luck than skill, that we'll be bringing on our copper project. So we like the commodities we're in. We're in two countries which are newish to the mining scene. So Eritrea is where our cash flow producing Bisha mine is located. And I think the previous CEO board and a lot of the existing management team did a great job of building a mine in a country which hadn't had mines before. And really they've helped that mining sector there develop. The second mine, which is really the future of the company, is the Timok mine in Serbia. This, I think I touched on the grades, and we'll come to it in more detail later, but this is really our core and our future, and where we're going to focus a lot of our efforts in the coming months and years. The third thing that we have to help is that we have a strong balance sheet. We have no debt. As of the end of June, we had $170 million of cash on our balance sheet, so that puts us in a good position to develop those two assets. And I think probably the most important one is a track record of success. So you have some new board members, you have some new management team members, but you also have a lot of the management team remaining that did a good job building the company to where it is today. So I think what I'll then do is just go into a bit more detail in our Serbian asset. Like any real estate, it's about location, location, location. I think what we have going for us really is that Serbia, as a lot of these Eastern European countries you see, has a great technical skill set within the country. So there are a lot of, it's not like when we went into Eritrea, we really had to train up and develop a base skill set within the country. In Serbia, a lot of that work is done for us. They're engineers, they're geologists, they're environmental scientists. So we feel a lot of the softer pieces are there. And the next thing in the mining sector is you ask yourself from an infrastructure perspective, how well positioned are you? And I think the fact that we are in an existing mining region means that we don't have to go put in extensive new power lines. We don't have to go put in new facilities around water or logistics. So a lot of that work's been done for us. And we think that puts us in a good position to develop the mine. The next key question you get is what's your grade like? And I think here, for those who are more generalist investors, as you go, a lot of the big copper mines in the world, a lot of mines these days are getting developed at 0.3, 0.4% copper grades. Granted, those are open pit mines. So as I thought about joining this company, what really appealed to me is those first two orange numbers, 2.9% copper for the inferred resource and an indicated resource of 13.5% copper. I mean, in mining, there are many headwinds you can get and many tailwinds, but grade is just about, from our perspective, the most key metric, and we sit with a really high-grade deposit. The next thing I think from our perspective is we're in a regional, we're in a zone where not only do we have this high-grade upper zone, but below it there's a lower zone, which is almost a separate project in itself. So all our efforts at the moment are focused on this upper zone, but we have a separate, deeper, but much potentially larger and lower grade lower zone, which we're working with our partners Freeport, which from our perspective at this stage, it doesn't take a lot of our focus or efforts, but we think offers us optionality in the longer term. So back to the upper zone and what we're focused on in terms of how we're specifically going to develop it. I think we're methodically taking it through the stage gates. So at the end of this month, you'll see our first view on value in our PEA, which we'll release with our third quarter results. And then we go on to delivering a pre-feasibility study, which we'll have to you in March of next year. So you see on the slide all the various work streams that are associated with that, the technical studies. We're looking to start our decline, which is really the decline that we're going to use to mine the ore. And by virtue of the fact that we can use our exploration license to start that development, it effectively gives us a head start in the development of the mine. And then secondly, we've got the next lower zone steps. As I said, there we're working with Freeport. That's a longer term project. But through the course of this year, going just into next year, we would have spent $20 million on drilling that out. So what we then have that complements this longer term growth in the core of our company is we still have our Bisha mine, where we've shortened the mine life. We came out with a new reserve estimate midway through this year. I think our view was, given some of that the ore body has transitioned to a more complex ore body. Previously this was a gold, then a copper mine, and now it's more complicated. You have zinc and copper and some of the recovery issues that one faces with these more complex ore bodies. We took a more prudent view to what could be the reserve life of this mine, which gets you the 4 years. And you would think we planned it, that it ramps down in 2021, just as we hope Timok is ramping up. Again, probably more luck than skill, but we'll take it either way. But that will give us the cash flows through the balance of the next couple of years to redeploy at Timok. From Bisha, we also think there's potential upsides that we continue to explore. We're in a geologically attractive region to continue exploration, and I think that whenever you sit with your base infrastructure installed, right, exploration is always hard, but you get a pretty good head start where if you find something, you don't necessarily need to go build a new mill and a new logistics system. So that's what makes us interesting from our perspective. We'll keep drilling in the region and also looking to see if we can develop either expand our open pit or look at can we go underground and access more of these resources that sit below our existing operation and convert those into reserves. I think we've talked about the leadership team, and the last slide just talks to really the analyst coverage and share structure that we have. But from our perspective, someone put it to me this way when I was thinking about, coming across to the company. I said, how would you characterize them? And they said, well, there've been two of the really high-grade discoveries in the last 5 to 10 years happen to have been owned by the same company, and that's Nevsun, which means that's a pretty good start. The one mine is no longer the grades it once was, and we're realistic about that. That's the Bisha mine, which is why we've shortened that mine life. But we think we can do that because we still have the growth in a really attractive asset in Serbia, which we're going to put all our efforts into developing in the coming years.
Thank you. Thanks, Frank.